Hello and welcome, and we're here at Holistic Investments, and I'm excited to be here with our new guest, Denis Belkevich, who's art economist, general partner at FuelArts, which is an art and tech VC firm from NYC. And I'm your host, Constantin Kogan, so I'm excited to welcome Denis today. Hi, Denis.
Yeah, hi, Constantin. Thank you for inviting me.
Yes, I mean, today we're going to touch upon really interesting, confluence between art and tech, and we're going to talk about NFTs a little bit. We're going to talk about generally what is investment in art and educate our audience about this. But traditionally, we have to throw a disclaimer that this content is for informational purposes only. You should not construe any such information as any other material as legal, tax, investment, financial, or any other advice. So now we're off the hook. We can talk freely about different topics. So, Denis, I mean, you have tremendous career. You've been evaluating art. Art is part of your life, right? You breathe and live with art. So you're the right person to ask the tough questions. And I know that you also issued an amazing report, which we'll actually leave in the comments, about the state of art. And generally, all the numbers that we've seen there. I mean, I honestly enjoyed it. So I know you were preparing a new one. So from this report, and I'm gonna start one by one, a few numbers, and from there we're gonna go with the questions, so basic questions. So in 2021 alone, about 146 art and tech startups received funding, about over $1 billion, right? And generally, I think it's important for people who are not art savvy, like myself. I don't want to lie. I don't have a lot of knowledge about art. Just to even simply understand, where do you begin? What is art investment, right? And generally, where the art market, where did it appear, and how did it start to be mostly as a commodity?
Thank you for that outstanding question, Constantin. Yes, I'll be happy to comment on the report, on that extensive work which we've done in the field of art and tech. So we'll come up to this. And the first question, it's always good to start with the very beginning, with the background. So the art market. First of all, we should understand what a market is. Let's say any market is a balance between demand and proposal. So, and this balance should be supported by regulators. So who is responsible for what in terms of art market? Artists responsible for supply and collectors responsible for demand. Neither galleries nor auction houses are responsible for demand, only collectors and artists. It's very interesting because all the auction houses and galleries and art fairs would like us to believe that they represent, let's say, they create the balance between supply and demand. No, auction houses and galleries are just the middlemen, are just the third parties who are responsible for transactions, though they are responsible for the regulation of prices when we come up to how, let's say, art market reacts on economic crisis. I'll tell you more about it. So, okay, let's move forward. So the art market: supply, artists; demand, collectors; and regulators, auction houses, galleries, and art fairs.
Mm-hmm.
Yeah, and if to speak about the history, the first mentions about the trading art comes from ancient Greece. So, but it was mostly ceramics. We should understand that after the new era for many for more than 10 centuries, the Catholic Church was a monopoly in the field of art. So Vatican was the main art collector and was responsible for demand. So all the art created by medieval artists had I mean, it was religious in the form of frescoes or icons. And only in the 18th century, the church loosened its grip due to wars and epidemics. In particular, it happened in Flanders, I mean, today's Netherlands. So because of wars and epidemics, the Catholic Church, just went aside of that part of Northern Europe, so which provoked the development of trade markets, of flea markets, and art market as well. So all the known mechanisms as auctions are coming from the Flandria, from the Flanders of the 18th century.
Got it.
So
So
this is
thank you
how
for
this is
this.
how secular art appeared. Secular art, with the development of secular art, we can speak about the development of the art market in whole.
Got it. So obviously, if we go back, like in the traditions, it's like a separate topic to talk about the history of art. And I'm sure like there are different ways how to even approach the topic, right? Because one can think about it as more of an interdisciplinary practice. That's you're talking about. You mentioned like there's cultural, political, like there's religious topics, economic, like different eras involved in the contribution of the art. And when you think about it, like essentially we're talking about the visual art predominantly, right? The first association of art, like it's like for a lot of people, I think it will be paintings, and then it will be like, let's say, sculptures, and then like some other like pieces of art, like ceramics, as you mentioned, right? And I'm sure that for people who are like only beginners and they want to try to get acquainted with it, like it's more important to understand the basics, right? So the basics is, for example, there is primary offering and there is secondary offering. So let's just digest like the simple steps. If I want to participate in art and I want to understand even how the primary market works and how the secondary works, where should I start?
You should start with the definition between the private and public market. What does it mean? So the art market, the art world, is divided into two parts. Let's say in terms of value of art traded is historically like 60 to 40. 60% of value are traded privately. Galleries are responsible for the private market. Which what does it mean, private? It means that we do not see the prices, the actual prices. The galleries do not disclose the contracts between collectors, between buyers and sellers. And when we come to the public market, it is represented by the auction houses. Auction houses 40% less than the private market. But why it's called public? Because we can see all the prices, because we can see the public databases listed at ArtPrice and ArtNet databases. So we can see all the 300-year history of sales, and what is more important, of repeat sales, which is the essence of art investment. So public market is represented by the auction houses, but at the same time, the galleries, they create the primary market, because galleries are working with artists directly. So galleries, in terms of the art market, they work like production agencies, and they conclude contracts with artists. So they supply artists with the workshops, with studios, with tools to create and promote their art. So all the art created is created for the primary market, which is captured, which is guided by galleries. And the auction house market, the public market, is at the same time secondary market, because when it comes to auction, they're due to the statutes of the auction houses, they can work only with the secondary market, which means that all the transactions are made between the collector who had previously purchased certain artwork and the next collector, I mean the third, the fourth one in the row. So let's say that from the one hand, one dimension is the definition, I mean, the division of the art market between public and private. At the same time, the same players represent the primary market, galleries, and the secondary market, which is art auctions. What's important to understand, to know, what about art fairs? Because it's all about the art fairs, Art Basel, Frieze, and the Armory show. So the art fairs are just year-round gatherings of galleries. So galleries make up to 50% of their transactions of art sales in monetary terms at art fairs. So it's the place for the galleries, for the primary market, to showcase their art and to sell. So galleries are also in the section of the primary market, and of course, private one.
Got it. And so it's interesting. So this discovery comes from the, from the galleries, as you mentioned. And I don't know a lot, but I don't know, like few, like, say New York, because, like Gagosian, for example, like, there's a huge, like gallery, like I think they have 5 locations just in New York, and also like in SF and London and many other places in the world, right?
And 19 locations worldwide. Yeah.
Got it. So those are the big guys who are like, I would call it, in a way, probably monopolists in the arts world, right? In art galleries, right? But and there are I'm sure there are others, like, so this is where the discovery happens. Then if they want to continue the path, it's and the collectors are interested in, as you explained, the artists become more famous and they're more known and renowned, so they go to the next level, is auction houses, right? And again, this is my primitive understanding, so I want to digest it, like, in a very, very simplified way, to make sure that a person who's let's say a beginner collector who's just trying to get acquainted with the basics would understand on a simplified level, right? So that's why I want to understand, in your experience, I'm sure you interact with collectors a lot as well. So what if you would describe the buyer's journey, right? Imagine you have to understand the portraits of, like, the psychological portrait of this collector, like what is his incentives, like what is his motivation, how he would even understand between, like, dozens of beautiful pieces of art, which one is the best, right? How to pick it, like, what's the fair price. So maybe you can describe this process, like, obviously we go one by one. Yeah.
Okay, cool. So thank you for your question. I'd like to return a bit back and to mention one very important phrase, that you've mentioned the word monopoly. Getting back to art market. Art market is oligopolic, which means there are several figures, several key figures, then the gap, and then the rest, like the best and the rest. This term from the real estate market works for the art market brilliantly. So let's say we have Sotheby's and Christie's and the rivalry between them, then the gap, then the rest. We have Gagosian, Pace, Aquavella, Heuser and Wirth, then the gap, then the rest. The same art fairs, Frieze and the Armory show, and the Art Basel, of course, then the gap, then the rest. So the collector, that adds a bit of gamification to the process of choosing who are you with. What do you prefer, Pepsi or Coke? So this rivalry, in my opinion, is made on purpose, because you have to choose. So what about the journey? What about the journey of the collector? Let's say, talking about the motivations, according to statistics, which art market, of course, has, there are 3 main motivations of collector. First, the first and the most important motivation of the collector is emotional motivation, which means I love it, I can't live without it, it suits my apartment, my wife or boyfriend loved it. So you have emotion as the core of your purchase. And in terms of the quantity of transactions, not the value, but the quantity of transactions, I mean the quantity of the artwork sold, 60% of the artwork sold are being transacted, having the emotional motivation as the core, as the essence part of the deal. Then the financial motivation, 25% of the deals: buy cheap, sell with a profit.
Okay.
That's the essence of the investment motivation. I mean, of the financial motivation. I believe later on we'll talk a bit more about art investment. That's it. That is the art investment. And the third one, and the most interesting one, because it's spectacular how the art market has this social motivation. We can hardly name any other market which has this social motivation, which is so obvious as at the art market. What does it mean? It has only 15% in the number of art objects, not the cost. But in terms of cost, social motivation, I mean, social purchases are the most expensive. Let's say all the artworks which are sold above 50 million are made, I mean, that purchases are made with social background. It means that if you made such a big purchase, all the newspapers will cover your purchase, and you'll have access as a collector. Even if it's your first purchase, you'll have access to the next level of collectors. You'll have access to the, let's say, closed private club of art lovers, where all the other collectors you'll meet are the businessmen in their, let's say, in their main life. So you will have a unique chance to help your initial business with your with your next level social connections. So it's like in terms of NFTs, Bored Ape Yacht Club, the club of NFT billionaires. So all the artworks sold above 50 million, I mean 50 million plus, are made with the social, I mean, are affected with social impact, because people can earn billions using the connections of the people from the next level. They get access to making those purchases.
So it's in other words, it's exposure, it's access to, as you mentioned, as a certain network of people and a certain club, as you mentioned, right, of people who are also influential. They have tastes. They understand that this is a next level of their life, not just because it's a showcase that you don't only have money, but you also have status, right? And it unites you with the right people. So that's an interesting component. I'm sure it will be valuable for a lot of people to understand this part. But on the practical side, so let's go to like very, as you mentioned, like how the price is formed. Like I don't know, can we use an example? I don't know, this picture on the background that we see from on your left side, is this a present, or you bought this piece? This is scripted, so I want to know.
I should confess this is a present. This is a present. But after I received this present, I purchased another painting of that artist. So it was unexpectedly for him. So, but I love making unexpected moves, and I really admire artists who are, let's say, who can use their art as a marketing instrument, like making beneficial gestures and making presents to art economists to please them. So in reply, I'm just purchasing the second artwork.
So how did you define the price? Like, let's imagine like it's an artist who is only up and coming, right? So he hadn't had a collection, maybe even a gallery, haven't yet discovered this person, right? So how would the price be formed? Is this like just peer-to-peer, meaning like he tells you, oh, pay me whatever, and you're paying him $400 just because you like him? So educate us a little bit on this part. How's it formed?
Yeah, I mean, if you look at the art business literature, you can widely make an expression. The artwork, the cost of the artwork, I mean, the artwork costs as much as the buyer is ready to pay for it. This is completely false. I mean, that's not true. let's start from the very beginning. So first, the value of the artwork is formed, as we can guess, on the primary market, I mean, in the gallery market, before it goes to auctions. So let's say for a young artist who has just graduated from an art school and he receives a contract signed by a small gallery. So the cost, the first cost, is equal to the cost of producing the artwork. I mean, canvas, time, studio, and paints, yeah, and brushes, multiplied by 2. So we have, from the one hand, we have the cost of the production cost, and multiplied by 2. It means that the second 50% of the overall total cost is, let's say, the cost
Labor?
of the idea.
Oh,
yeah,
not the labor.
Not the labor, because the labor. It's a good question. It's a good question.
Yeah, because the cost of the
when the artist
is very
has
subjective. This is interesting when you bring it up. Like, how do you value the cost of? I say my idea is $1 million worth of like.
One sec. If you're ready to pay $1 million, so feel free to pay it to the artist. But collectors are very, especially sophisticated collectors. They understand the rules of the game. So when they come to the gallery and see a newborn emerging artist, they understand that his price can be, let's say, $10,000. So it will be between 800 and let's say $800 and $2,000 or 2,000. Yeah. So which means when you say the labor price, labor price, but it's in the art world, it's substituted by, let's say, the creative process. So the labor, it refers more to, let's say, not the artworks, but let's say products of creative industry, like the design or some, products that can be multiplied. Yeah. When we speak about the unique essence, unique nature of the artwork, and each artwork is is unique as an asset, which occurs some problems, by the way. The first price is production cost multiplied by 2. Then from year to year, the cost of the work increases from 10 to 30%. Which is influenced by the 3 main factors. For the young artist, it's participation in competitions, art residences, and art biennials. All that should be a part of the everyday management work conducted by the gallery or the artist agent. So also the name of the gallery affects the cost. For example, when an artist moves from, let's say, middle-level gallery to a high-level gallery after, let's say, 5 years of exclusive contract, the average cost of his works automatically increases. It could be also multiplied in 2 or 3 times at the same time. So with the growth of the artist, the other pricing factors are included. They start they start surrounding the artist. Let's say the number of group and solo exhibitions the artist takes part in, the presence of his works in museum collections and private collections. So depending on the level of that museum collections or private collections, one can judge about the price, and the gallery can set up the price. But this is the private, the private and the primary market. Therefore, when an artist appears at an auction sale, this indicates that a secondary market is already created for him. So don't trust artists. I'm advising to everyone who do not have a contract with the gallery, who do not have any exhibitions in their CV, but they have auction sales. What does it mean? In, let's say, 99% of the cases, disclaimer, that means that these sales were fake fake sales, they were buybacks. So the artist or his management team just put him on an auction, pretending they are collectors, let's say owners, not the representatives, not the artistic agents, and they just set up the price. Why it's dangerous to purchase an artist who plays those fake games? Because you will never sell him. You will never sell him. There is no market behind him. There is no lobby behind him, like the gallery. So let's say the artist, the artist gets to the auction house. Sorry, yeah.
So just to clarify, let's pause here for a second, so to maybe digest it in more like simplified way. So what you're saying, in other words, so let's imagine I am just an up and coming like emerging artist, right? And I go to, if I appear in Gagosian or Galerie Peretin, like that's like a stamp of validation, right? That's like everyone, you can verify it, and there's databases which can showcase that you actually appeared there. There is a price, there's a floor price, there's a clear understanding how the price was formed, and the reputation of the gallery itself proves that this is the real price. Now, if you're talking about like some less known, let's say gallery, something that no one can even prove, and there's artificially they're boosting the price, that's where the danger comes in, right? Let's maybe just also create like a pattern. Where can people go, and where can they see that this was actually validated from the primary auction house, and they actually prove it?
Yeah, so that's a very good question. So as I've mentioned, there are, let's say, some validators, experienced validators like ArtNet and ArtPrice, which are showcasing the auction sales, but it's for the public market, for the secondary market. What validators are on the primary market? Are they the main resource for the primary market is Artifacts. Artifacts is a digital register created by a German art historian, Markus Klassen, 20 years ago. So they put together, they assemble, they collect all the data regarding the academic activity of the artist, which means starting from the education, which education did he receive, with which galleries did he hold some kind of exhibitions, group exhibitions, solo exhibitions, which artists did he participate in the group exhibitions with, because the names of the artists you are participating with in group exhibitions, it also affects on your price, on your sustainability on the market. How many grants did you take? How many competitions, biennials, and so on. So they create so-called academic value. So it's Artifacts, it's the registry of the academic value and academic institutional value, and also marketing activity, because for a contemporary artist it's very marketing activity is very important. So he should be available on Instagram, other social networks, Twitter, etc. So he should give interviews, he should have a website, and so on. So they put together all the mentions of these artists in mass media, and also they create the indices of academic and marketing activity of the artist. So if even if the artist doesn't have any, let's say, secondary market auction sales yet, you can go to Artifacts and look, let's say, who is behind the artist, what lobby in terms of the gallery contract does he have. Because why it's important for an artist to be signed by a gallery, because it means that each gallery has its number of collectors. So an artist signed by a gallery is an artist with the collectors behind him who rely to the gallery's choice, gallery who is carefully selecting artists and providing them with curatorial and other marketing support. Also, it's important to understand that the galleries, there are, let's say, 6 main levels of the galleries. And the main definition of the level is the price which their devoted collectors are ready to pay for the art represented in that galleries. that the let's say the primary level is from $100 to $1,000. Then from 1,000 to 10,000, then from 10,000 to let's say 250,000, then from 250 to 1.5 million, then from 1.5 million to 10 million, then above 10 million. So when the artist has a contract with the gallery, let's say, which has a group of collectors who are ready to pay from 1,000 to 10,000, and when this artist, due to his creative activity and marketing activity, when his price starts, yes, when his price increases, so for more than 10,000, the gallery, it's much easier and simpler for the gallery to sell his contract to the gallery of the upper stage than to convince their collectors to pay more than they are used to pay. That's how the ladder, the social ladder
the
of
hierarchy, basically,
the world works.
So that's a very interesting point that you've made about the hierarchy. So yeah, so even like the smaller gallery feeling that basically the artist upgrades, and like make this steep, like, growth and the appreciation of his artwork, right? It's easier for them to like refer to another gallery, which they understand they have upper class clients who have more money to actually acquire this piece of art. And also, as I understand, it will upgrade the name and the reputation of both of an artist and of the gallery that referred them, right?
Sure. Because if a gallery continuously producing good names for upper class galleries, it becomes like a farm club.
Got it. Like an incubator in a way, right?
When you talk about football, I mean soccer. Let's say for a small soccer club, it's more valuable to sell the contract to a higher level club than to increase the salary for a good player.
Yes,
that's it.
I basically just thought about the same thing, like, that you incubate, like, almost like in your own team, and if it's a small town, like, and then you sell it to a different club which has a better reputation, and then you partner with them. That's an interesting point. So besides, because I have a lot of questions in there regarding this, because we have to slowly go to something that is near and dear to my heart, which is digital asset world, right, and NFTs, right? So I would be interested later on. I will ask you another important question, like, which is more fundamental, but I would be curious not to forget about like the question, like, where would you put Beeple, like, who sold his art, like, like for $70 million out of nowhere, and he skipped all the steps of the ladder, right? So that was like a completely different modus operandi, if you will. But before that, like, let's also complete the picture for someone who wants to understand the basics. What could be done with arts besides just buying and selling from the gallery and from the auction house? Like, I know that there are now more sophisticated tools, like, you can use a collateral, you can find the different financial instruments built on top of it, like you have fractional ownership, you have art hedge funds where you can invest, and they, as you mentioned, they speculate, they buy, like, art for the purpose of reselling it later, right? And then distribute the profits, like just as people who are like traditional hedge fund managers buying stocks, right? So can you elaborate on the types of other ways? Yeah.
Actually, Constantin, you have enumerated almost all of the options which are, let's say, possible, which are actual for the art owners by now in your question. But let me summarize it again. So, yes, first of all, you can use your work as a collateral. Yeah, you can go to up to 10, 12 banks in the world and, let's say, receive a loan using your art as a collateral. Then you can
give top 3 banks which you would recommend. Let's say someone is listening to it.
Okay, so UBS Bank, Bank of America, and Emigrant Bank.
Got it. And how would that work, really briefly? Let's say I have a piece of art that costs let's say for the sake of example, $100,000, like how would the process work? They would evaluate it, and how much would they give me?
Yes, if it costs 100 less than $250,000, they will advise you to wait until it increases in price, because they do not work with let's say with middle priced art. Let's say your art costs 10 million, and you go to the bank, and the bank says, okay, I'll give you a loan for, let's say, depending on the name of the artist who created it. The more valuable the name, the longer your loan will be provided to you. So in general, you'll receive a loan. I mean, the body of the loan will be between 40 and 65% of the fair market price of your artwork, and you will pay for that on the annual basis between 7 and 9% in general.
Perfect. And who audits the price, the fair market price? Is it someone like Christie's and Sotheby's?
No, that's a good question. So each bank has a contract with art appraisal company like Jones or others. So even Sotheby's and Christie's, they in, let's say, in the most of cases working with blue chip art, they use when they need an official appraisal, they use a third-party appraisal for not to be accused in
manipulation. I understand.
In setting in price manipulation. Yes, you're quite right. So but please be sure that the appraisal will decrease your price up, let's say, in 20%. So in fact, you'll receive in general 50% of the fair market price, which will be 20% lower than the actual market price, which means that you'll receive from 35 to 40% of the price of your artwork, and you'll have to pay, let's say, 8%. I mean, the middle range is 8% annual. So all that banks are looking at your bankruptcy, they would be happy if you will not return for your artwork. For them, could sell it. If they sell it for a market price, they will double and a half their profit.
Got it. Okay. So what is other financial instruments, like really brief?
Also yes. Also you can. There are specialized hedge art funds. They work as, let's say, the classic assets hedge funds with diversified portfolio, but the diversified portfolio means that it consists of artworks from, let's say, artists of different periods, different countries, different genres and styles of art. So you can give your artwork to one of those funds on the stage of creating the portfolio. Of course, you have to get access to those deals. You can also fractionalize your artwork, and more platforms for fractionalizing art are appearing at the moment, like Masterworks, which received 110 million of investment last year. So a New York-based company.
Yeah,
so
I was about to ask you about them. Interesting. Yeah. Mm-hmm.
Yeah, I mean, I told you the main thing that they received 110 million of investment, and by now it's the top investment in art and tech company, which is apart from NFTs. in the NFT world, the biggest investment, the two biggest investments were received by OpenSea, 300 million in January this year, and in March this year, Bored Ape Yacht Club received 450 million of investment. Yeah. So, but when it comes to brick and mortar physical art, Masterworks are the leaders. They received even more than Artsy.
I think they're very popular just because they did something like really, in my opinion, as a person who's like not so, again, sophisticated in the correlation, but I think they simplified it and they made it like clear, like especially listing like, some iconic offerings like Banksy, Jean-Michel Basquiat, like Warhol, like, and few others. And they explained the value behind it, right? And what I liked about their analysis, what was interesting, that they actually tried to explain that contemporary art, like from the 1995 to 2021, like, and maybe 2022, even more, like, it actually, the average annualized returns are about 13.8%, which actually outperforms the S&P 500 total return. So they showcase that, again, I don't know if it's true or not. Maybe, you can comment on the numbers. You're smiling, right? But at least they try to explain to people that that's another way how to invest, how to make sure that your money are working for you.
Yeah, Konstantin, you're quite right, and that's the common number which everyone knows. 12-13% of internal rate of return per annum. So, but there is a small mistake in it, and I want you and your audience to know the truth. So the mistake is that the period of time, which is taken into consideration there, let's say last 50 years, is more than the art market in its modern terms exists. So the art market in its current, let's say, mechanics was created in the end of 1980s only. So it's less than 40 years. But if we take those 40 years, the rules of the, let's say, of the art market, which are actual now, so we'll see only 8.5%, which is, let's say, which is also good. Everything more than every number exceeding, let's say, 5% of internal rate return is good, as we know. But but those numbers are more realistic. So we should speak about the art market in its current situation, because before that it was quite flat. So that's how the 13% are coming from. So from flat art market to current situation, so it will be 13 and more. But if we take the contemporary, art market as it is in the last 40 years, so it's 8.5, which is also good.
No, it's actually, listen, it's all relative. I'll be frank with you. For me, those numbers are very conservative. So I think we have to be very clear that this is targeting the audience who are more seeking for wealth preservation, for young people who are, like, let's say, trying to invest in crypto and expecting very, very different returns, and they understand that it's also the mentality is different, right? It's almost like you either win everything or lose everything. So those are for people who are conservative, who are like steady. They want to make sure that the money are, first of all, overcoming the inflation rate, which is quite high right now. At the moment, we're in a deep recession, it's wealth preservation. But besides that, like, I just want to come back to the core of our discussion, because I don't want to lose the other part. So we're talking about, like, we talked about different pieces of investment. So now let's go a little bit, like, from different opportunities of investment. Generally, we talked about them, and do a slow transition to what we're having with the current situation, and I would say phenomenon, as NFTs. because essentially it's changing a lot of rules. It's removing some middlemen, right? And we're seeing, as you mentioned, Board Club actually raised a bigger amount of funding than a traditional brick and mortar, like, project, right? So now I'm curious to hear your analysis on the future of this particular digitization and like crypto revolution that is coming to art industry.
Well, thank you, Konstantin. Let me talk on behalf of the, let's say, VCs, venture capitalist world. NFT is a brand new market. And as soon as an investor is facing with a brand new market, he wants to see some particular triggers, which not only tell him that this market is hot, but that there is an opportunity on this market. And of course, the investor doesn't want to lose that opportunity, and he wants to get access to the best deals in this particular market. So what are those triggers? As we both know, the investor is less interested in the volume of trade of NFTs, which is, let's say, 2021 was $46 billion. He's not interested in blue chip sales like Beeple, okay, for 69 million at Christie's, also in 2021. But what he wants to see, he wants to see the number of investments in the infrastructure. I mean, what leads behind? How many investments have been made into the infrastructural startups of the value chain? In other words, where all the NFTs will be traded, how they will be created, how they will be analyzed, because all the infrastructure, on different markets, and NFT is already a market because it has its demand, supply, and regulators, community driven regulators. But all the investors are looking to, so first of all, on the at the ecosystem, at the quantity of investments in the ecosystem startups. So our company, FuelArts, we have identified 383 infrastructural startups which support the NFT ecosystem in 4 categories: production, which produce NFTs, design studios, trade, marketplaces, DAOs, and so on. Then management. What happens between the purchase and the sale? That is very important with the artwork. If you want to increase the capitalization of the artwork, both in physical and also NFT worlds, you have to maintain your art. You have to use marketing tools to promote your art in between this purchase and sale. And the fourth part is analytics. So how many companies and how much investment was deployed in those companies, which create, let's say, the trading signals for the market players. What's the best time to buy? What's the best time to sell? How the price increases? How can we make predictions, or may we? And so on. So this is the first thing investor is interested in. And we can see and we can state that the ecosystem of NFTs has already been formed, and it works very well. The second thing, does the industry has some market reports, industry reports? Yes, it does. More than 15 reports examining and showcasing different parts of the NFT industry, starting from the FuelArts report, which shows the investments in startups, to, let's say, Hiscox online reports, or let's say Invaluable report, which showcases and covers the trading volume part and speaks about the blockchains involved in that, and so on. And the third main thing is academic approach. So are there some academic, scientific researches made by professionals, made by academics, which are covering this topic? So who is researching in scientific institutes Are there some PhD works? And yes, they are based on the NFT market. So looking at those three parameters, investor considers if this market is ready for investment or not. So from my perspective, the NFT market is ready enough to be invested in, but in the startups, first of all, because, when I'm asked if I invest in art, or let's say if I invest in NFTs, I say yes, but on behalf of startups, we deploy money in the startups, because during the golden fever, the one who makes the railroad makes a win-win.
They call it picks and shovels. Yes. So you invest in picks and shovels. Yes. Basically, that means, just to clarify, if you are to invest in equity of projects, and if you have a great project that is in the art here and in the convergence of the art and tech, please guys follow, like Denis, and we're gonna share their link. We can pitch that, and I know you also incubate projects. So we obviously, if you're art related, we'll be happy to connect you directly to guys. But besides that, I just want to clarify. So, in your opinion, one of the last questions I want to ask you before we go to one personal question I want to ask you also. So, what is the major, if you would to identify the top 3 major problems that blockchain technologies, and specifically several maybe selected NFT project that you already reviewed? I know you review hundreds of them. What are the biggest problems it's solving right now for the industry of art?
The biggest problem, in my opinion, okay, the 3 biggest problems. The first problem is that when 99% of artists who want to move from physical world to the digital world, when they want to create an NFT, they keep in mind they are thinking about profit. No, you have to think about creating art, because the community respects only those who create real art. So let's say the artistic values of the artwork in physical world, they work as well in the digital world. So don't think that creating NFTs will make you profit. No, first of all, you should create art and then put it into an NFT digital coverage, creating an NFT passport, as I say. So first of all is, let's say, the complete misunderstanding, unfortunately, by most of traditional artists and traditional collectors, what NFTs are. And I believe that educational vehicles, educational programs should help, as they help to develop the current art market, because in 1960s and 70s, on the state level, in biggest universities and high schools in the United States, there was a special course of art education. So that's how the generation of traditional art collectors was born. The second problem, which I would say is, let's say, we speak a lot about the decentralization and transborderness and about the transparency of all the blockchains. But unfortunately, not all the NFT marketplaces, they provide an access to repeat sales. Repeat sales are very important. We started our discussion with the 300-year history of the traditional art market. But what we have now, so let's say the science of art economics, which has led to art investment, the development of art investment, professional art investment, it was based on this registry, official and public registry of auction sales and repeat sales of particular works. Because if we know that some particular artwork was sold more than twice, then we can estimate the time of purchase, the time of sale, let's say handling period, then we can estimate the internal rate return. Then we can imagine the possible maintenance costs, and let's say prognose some kind of return on investment, excluding one from another.
So in other
But
words,
with the
provenance
NFTs,
history, right? So that's what you what's
yes, yeah. So we see that traction because auction houses have been provided it for centuries, and it took 10 years for from the end of starting from the end of 1980s to digitize all that traction. But now on blockchain we should have that. But anyway, the NFTs are from one marketplace to another. Some data is missed. Let me just enumerate what data is missed. Let's say we can't say about the investment attractiveness of NFTs because this data is missed. Let's say, how does the cost of NFT objects change over time? For which of the artists it grows faster than the others? Let's say, what is the optimal period of ownership of an NFT object between buying and selling? What is the dynamics of the NFT market in general? Because it has a 4-year history, but for 3 years the market was flat, and then we had an incredible increase provoked by the growth of the crypto market. So, for instance, just to compare a short comparison, the history of art market has experienced 54 crises. So the art economists, they studied the let's say influence of each crisis. So we have the statistics how the traditional art reacts on this or that crisis. What has the NFT? How many crises did the NFT market expected? Only one, the pandemic, but it grew up because of pandemic, and now we have the crisis provoked by the war in Ukraine, and so only 1.5 crises, and they are not they are unusual crises. So it's still unpredictable, and the fifth part is also very important. So yes, connected with financial crisis. So how they affect this NFT market. But of course, we should. I mean, there is good news that the dust calms down, and we see that more and more collectors they require a curatorial approach towards NFTs. So there is a definition, and I'm coming to the third problem. Let's say the definition between good NFT art and less good NFT art, or better say curatorial art and flea market art, flea market marketplaces, and curatorial based marketplaces. This problem, I mean, it's not visible yet, but sooner or later the NFT market will require the instruments which have already been which already showed their efficiency on the physical art market. I mean, the instruments for capitalization of the art in private possession, which is museums, rent to the museums, publications, biennials, residences, and so on. Do we have a lot of digital museums now? No. Do we have a lot of, I mean, do physical museums understand what NFTs are? No.
Not yet.
So not yet. Right. So, we at FuelArts, we also provoke several, let's say, startup founders to pivot into, let's say, academic part, to create startups which would make a bridge between understanding the academic essence of NFTs, because how the museums will buy NFTs into their collections if the NFTs are not yet let's say, are not implemented into world art history. So we at FuelArts, we initiated several academic researches to define the place, the academic institutional place for NFTs in the world art history, because in 3 years, there might be a problem with academic appreciation of NFTs. In that case, the price will just stop and will not go up because we'll not have instruments of how to capitalize it.
Got it. No, thank you for this detailed answer. I think, indeed, all the problems that you've mentioned, they are actual, and like we have we have a lot to work out. And you're right. I mean, like 1.5 or like 2 crises, like, or I would call them cycles, is not enough to actually form an opinion. And any market, like, they need more of a, like, listen, crypto itself is a young market, and NFTs even younger. I actually know I had honor to actually spoke to the people who co-founded the protocol that all the NFTs are like built upon, right? And like it's people don't understand, it's like 2018 we're talking about, right? It's 4 years, as you mentioned, so it's very young. The rules are not black and white, and there's still a lot of work to do, and we're working at it. The question is, like, again, we can talk about it a lot, obviously, right? But I understand that besides just this part, like, we will do a lot of work to educate our customers. We do it as well, like as an incubator, and we produce a lot of videos. You are doing tremendous job with reports, which I commend people to just to take a look at them, like, and we're going to leave all the links. But again, I don't want people to feel that this is the last meeting that we have. I wanted to come more to this videos and to the podcast. So last question I want to ask you, Denis, like, so before we conclude, is more of a personal. So I know that you're a creative person. I know you're a smart person, like, who's trying to bring tech to the art industry. But I want to ask you more personal question about what is the purpose, why you're doing what you're doing, what's the meaning in life to you?
That's a very surprising question, and I'm glad that I heard it from you. I've started implementing tech in art because I felt on my own experience that merging those two worlds is needed. Because I had my own Excel file, I wanted to create an index. So I made it in the Excel file. Then it was too boring for me to work with this Excel file. So I asked a friend of mine, an artist, to make the front end for this Excel file. Then I asked a programmer to make a back end. They understood I have a startup. And then I had a problem with investors. Because I haven't passed any dedicated Art+Tech accelerator, but at that time there was no Art+Tech accelerator. So that's why we created FuelArts initially as the first art and tech accelerator, and now we're expanding our activity to the venture arm and venture fund. So I started doing that to simplify my own life. And then I understood there is a market problem because there are a lot of startuppers like me. And the more I work, the more I simplify their work. And their, let's say, their ability to meet the investors. So what we're doing, we are merging the two worlds of VC and art and tech, making it more transparent to investors and making it less scary for startups to prevent them from doing mistakes. So I just want those who are making the first steps in art and tech not to make my mistakes I did, and that's my that's the purpose of FuelArts and of let's say the meaning of my life. Yeah, right.
That's impressive. Like, that's the business that you're actually living with, it's also part of your life, and it's so meaningful. Denis, really appreciate your time. I appreciate your expertise, your knowledge, and I think you've shared tremendous amount of important facts today, like, and just exciting facts. I'm sure like people who would bear with us and go through everything. We'll obviously share the time codes. If you're interested in particular part, you'll be able to skip some part and listen to the other. But yeah, we will be sharing everything, with our audience. I would love to, on a personal level, to see you more and to learn from you. So really appreciate your time, Denis.
Yeah, thank you, Constantin. There are still a lot of topics uncovered. I'll be grateful to if we have the possibility to deliver that knowledge to, let's say, maybe next time we'll speak about some practical instruments of how to enter the art investment world.
For sure. So
and how not to make mistakes there.
We'll save something for later. Yes.
Yes, sure.
Thank you so much.
Thank you again.